Our continuing coverage here, analysing Budget 2025 at the CNBC-TV18 Budget Headquarters continues. It's been a long day, but it's been an even longer month for the two gentlemen who are here with me, the Finance Secretary, Tuhin Kanta Pandey, as well as the new DIPAM Secretary, Mr. Arunish Chawla. Gentlemen, thank you very much for joining us here on CNBC-TV18. I think everyone's struggling to find the devil in the fine print this time around. Last budget, there was the indexation issue, but so far it seems to have been a clean list of announcements that's coming from the finance minister. But if I could address one of the disappointments, to put it mildly, as far as the Capex issue is concerned, and I'll quote a tweet to you. The key issue in the budget is the near zero allocation for infra over the last year, 11.2 lakh or over 11.1. Is this a reset of national economic strategy that large outlays in infra will no longer be the pump primer of the economy? Will this be the hitherto stated strategy? Mr. Pandey.
Well, I think that's not the way we should look at it, because if you really look at it, the Capex directly, and then first of all, we have to understand the budget. There are two kinds of Capex. One is the Capex per se directly by the central government.
Yeah.
The secondly is the Capex which goes from the central government, first as a grant, as a revenue expenditure, and then it goes into for creation of assets at the hand of the states. So therefore, in the budget at a glance, in the statement itself, you have something called grant in creation of capital assets.
Right.
And this has been there for many years. And this number is actually 15.48 lakh crores. It's about 15.6 lakh crores. So it's not really 11 lakh crores that we are talking.
So you're saying that we should not see it as 11.1 to 11.21. We should see it as 11.1 to the allocation that's been apportioned for states as well.
Exactly. Why it's important? Because if you really see, there is a 10% growth on the RE numbers over, in this BE for the Capex.
Right.
But if you really count the two, it is 17% growth, because a lot of money we are sending it in the Capex through
to
the states. So therefore, if you really don't count them, you really don't get to know exactly. And those numbers are very much visible in the budget itself.
So there's no change as far as the Capex heavy lifting that the government attempted to do in the last few years. There's no change in that strategy is the question. The
Capex continues. All I'm saying is that it may not be that we are having that 30% increment at one time and so on. But, the Capex continues, and our effort will be on implementation of Capex.
Okay. Let me now address the issue as far as the personal income tax cut is concerned. And I think everyone acknowledges that this was not what was expected. This is much better than what the street was expecting, what people were expecting, which was some relief. Now, what do you believe this could potentially do, and how soon could it provide that growth momentum to the economy?
Well, when it comes to the economy, we have to see is who is making investments, who is making savings, who is doing consumption. So therefore, we have in the broad economy, there are three characters. One is the households, the second is the private sector, corporate sector, the third is the government. Now, everyone, does saving, everyone does an investment. And put together, it is a saving, and put together is an investment. Now, compositionally, what we are doing is we are shifting some of the money which the government would have got had we continued with the old rates into the hands of the people. And all that it will do, it will not only spur consumption, it can also have impact on savings or investments. You and me, when you get more money, you may choose to consume, you may choose to save, or you may choose to invest. If you choose to save, somebody else is investing it on your behalf.
Right.
If you choose to invest directly in a house or something, you are the investor directly.
Yeah.
And if you choose to consume, you are basically spurring the demand for several others when you will propel investments by them.
Right.
So in a way, we are putting that money, and that money is going to come back to the economy anyways.
So what could be the impact of that? And again, there are estimates being made by former colleagues of yours in terms of the multiplier impact on growth. Do you believe that this 10.8% nominal growth number, you could perhaps do better?
Well, I would say that, it will actually, because we are giving a choice to the people in a manner, I think those choices will be duly, wisely done by the people, and therefore economy will stand to benefit.
So you're not sticking your neck out and 6.8%. The CA says now within grasp. The DA says looks very doable. Do you believe that you could perhaps better it?
Well, I think we are looking up. If you really see, we have, there was a prediction that in the second half it will look up. See, we are also facing a lot of global headwinds. So it's not that the environment that we are right now in is extremely favorable. And so our economy, even though as it's one of the fastest growing economy among the large economies in the world, it is also facing global headwinds. So we do not know exactly how it's going to pan out. But we are putting a best foot forward in trying to optimize growth, trying to find out, as FM said, reforms as a fuel. As FM said, engines, 4 engines. The engines are very broad-based. Agriculture, MSME, investment. And investment is not merely investment in physical infrastructure, in people, as well as economy and exports. So therefore, I think the overall and the inclusivity which that comes in, and plus this income tax relief, if you really take it, it is a balanced view. It's not binary that it is Capex versus this. I think it is basically a balanced view to propel the economy and also reform as a fuel.
Do you believe that 75% that is moved to the new tax regime, that number will go up significantly on the back of the measures that you've announced?
Surely. Maybe they will reach 100%.
Maybe they'll reach 100% and the sun will finally set on the old tax regime. You believe that?
Well, the choice is there, but if the people don't find it attractive enough, they will move. Let them make a choice. Let them make a choice. So, Mr. Chawla, let's address the disinvestment agenda. 47,000 crore rupees, that is what the budget has put down as the disinvestment target. There's no point talking about targets because, we've not really realistically achieved the disinvestment targets that have been set out. So let me ask you what the disinvestment calendar looks like, starting with IDBI Bank, because that has moved much further along than anything else. Where are we on that today, sir?
Thank you. I'll first clarify that there is no fixed disinvestment target. We have moved on to a more comprehensive asset management approach, where our aim is to optimize value, not just for the government, which is the promoter of enterprises, but millions of minority shareholders, ordinary investors who have reposed their faith in us. As part of our strategy, we will balance between a consistent dividend policy and a calibrated asset monetization strategy. Along with this, we have built in strict performance benchmarks for the CPSEs, along with Capex targets. As Finance Secretary mentioned, a large part of the Capex actually comes from public enterprises. Yes. And an effective communication strategy. But that does not mean that I can reveal market-sensitive information.
On the one that's already public, which is IDBI Bank, where do things stand?
Good. So IDBI, that is on track. And I will not give precise details at the moment, but I can assure you it's on track, and in due course, you will hear it.
Okay, in due course, meaning obviously nothing in this financial year, so it moves to the next financial year as far as the bids are concerned.
No comments.
No comments on that. Let me ask you this, sir. You've spent a large part of the last many years looking at disinvestment. Now, what should we realistically expect in terms of the appetite for disinvestment? And also, how should we read the moves that have been seen recently with the government actually infusing capital into SIC PSUs, whether it's RINL or MTNL and so on and so forth? What should we read into the message the government is sending out on disinvestment?
No, I think this, so far as the MTNL is concerned, it was never on the disinvestment list. And it was because it was decided that at least one strategic, because of the strategic nature of the BSNL MTL was retained as a part of our policy. So far as RINL is concerned, you know that as a going concern, the company has been in a very bad state. So as a going concern, we have to look at it. And now the whole analysis has been done, a thing has been done, because in any case, it's an ongoing concern issue. But even on the IDBI, I mean, I would hazard a guess, you know, the things are there, the due diligence process is on. And
but it's been on for years.
No, I mean, there was an issue because there was an RBI process that had taken a lot of time, and then finally the RBI cleared it. We told the market, told the media that, you know, the due diligence process is now on after the fit and proper.
Right.
And I think very soon the financial bids will come, and following which, you know, the result will be out. I mean, the thing.
So you're
will
saying
take
very
place.
soon the financial bids. Can you give us a more specific timeline?
I would say, I mean, of course, Arunish would be in a better position to say, but we were saying that, you know, possibly before March, this end of the financial year, financial bids might come, and then, you know, subsequently, you know, there will be some process to do it in
so
the very
even
next
by
year.
March, we could still hope for the bids to come in as far as IDBI Bank is concerned.
It depends if the transaction advisor is able to really, I mean, if the bidders are ready to do that, they are ongoing. So, so but that's on track.
That's on track, and that is the hope. But what is the appetite, sir, as far as privatization is concerned now? And there was a list that had been identified, that had been put down. Where do things stand on that front?
I said that disinvestment has two legs. One is that, you know, minority stake sale, another is the, you know, outright privatization. If you really see the minority stake sale, they have been going on steadily. You have, you know, OFS in Cochin shipyard, you had earlier in this. In Hindustan Zinc, you know, there was some dilution. And this goes on. And it goes in a calibrated manner, as you said. And then, of course, there were, you know, listings. You had NTPC Green, which came, and the full thing, and it's now a very major company. And at the time also, we had announced that many more green companies will come downstream of those, some of those brown companies. So that part, Irida was listed earlier. So I think disinvestment is going on in a calibrated manner.
More listings expected in 2025, Mr. Chawla and Mr. Pandey?
No, I mean, obviously, if there are candidates, why not?
Okay, why not? But you know, on the larger issue as far as the dividends are concerned, between the RBI, between PSBs as well as financial institutions, 2.56 lakh crore rupees, I think that is what the government is put down in terms of the number cumulatively as far as the dividends are concerned. How much are you hoping for the RBI to deliver? They've given you a bonanza the last time around as well.
No, I will not hazard a guess, you know, these are numbers. See, point is on the receipt numbers, which are other than tax. See, when it is a tax numbers and other numbers are slightly different. In tax numbers, you have a, you know, you have a legislation backing you. You know the taxes will come. It will depend upon how the economy pans out. In case of other numbers, there is a lot of things which happens is subject to profitability, subject to this. So there are certain numbers, and we hope that, you know, as soon as, you know, these things are declared, you will come to know. But in CPSCs, he will be able to clarify you on dividends.
What is the expectation, Mr. Chawla?
So this year, we will not only meet, but slightly exceed the target. And next year, we have a slightly more ambitious target, and we will achieve that as well.
Will achieve that. A quick question. There is no provision that's been made as far as the LPG under-recoveries are concerned to oil marketing companies. Why is that the case? Because that was clearly the demand that was put on the table as well.
Well, I think they will work out, because the oil thing is, you know, going up and down and depends upon the market. And they will definitely, you know, sort of work it out, you know, in what manner.
So the OMCs will have to work it out?
I mean, OMC and the government normally work it. Normally, OMC work it out initially because, you know, they have a certain way of...
But you haven't provided anything for them in the budget.
No, but whenever there is a need and something, it is additionally provided. In terms of fertilizer also, sometimes, you know, the prices move differently and then additional thing has been provided.
So the cushion that you've got, on the expenditure side, that is what has given you the ability to be able to do the personal income tax cut?
Well, if you really see the personal income tax, I mean, if you look at our numbers, then we have got about 20% average growth rate last few years in personal income tax. Buoyancy has been 2+. And if you really look at the numbers this year, that what we have projected, buoyancy is now projected as 1.4, and the growth we have projected as 14%. So we have done that moderation in growth, and our numbers are realistic.
Numbers are realistic, but I'm asking you the cushion that you were able to get to be able to deliver this, 1 lakh crore rupee revenue foregone to enable the tax cuts to come in. That's been on account of the fact that I wouldn't say expenditure compression, but you've saved on the expenditure side.
I would agree to that. I'm only saying that, the revenue side, we could have, had we not given out this, sort of relief, then probably our revenue figures would have been higher.
Yeah.
So we are balancing the thing, and we are achieving 4.4% number, as we promised.
On fiscal deficit, absolutely, and that is something that has, of course, been given a big thumbs up on the consolidation front. But on asset monetization, 10 lakh crore rupee, that's the target that's been put down by the government. 5 lakhs, I think, 5 lakh crores was the last target. Close to being able to achieve that?
Yes, we are close to achieving. In fact, we may slightly exceed the target this year, and we hope to do the same next year.
So in terms of the identified list that will be up for monetization as part of the announcement that came in today, when should we realistically expect things to move on that front?
I think some homework has been done, some more is being done, and for this year, you've already learned, most of it has been announced. And for next year, we'll probably move, and you will see it very quickly as the year dawns.
So let me ask you, on balance at the end of what has been delivered today, and there's been a lot of announcements that have come in to take the reform process forward, some with specific timelines, but some work in progress, including things like the National Manufacturing Mission and so on and so forth. Where does this leave the economy? What do you see as the tailwinds that the budget has provided, and what do you believe are the headwinds that you will have to contend with?
Well, the tailwinds, as you say, that first we have really, sort of given that money to the middle class, to everyone. In fact, one of the things that you must appreciate that it is across the board, and it is slab, so it fits in well with the new reform bill, the new IT bill that we are going to bring. The second, of course, is that we are, sort of looking at all the critical areas where the investments are required for increasing productivity. We are looking at, as I said, 4 engines, the fuel, the reforms as a fuel. We have looked at taxation reforms. We are looking at the financial reforms. We are looking at regulatory reforms, and they're very important because, a lot of friction points, a lot of pain points we must remove. We are continuing with our Capex. And I'm again reiterating, it's not to say that we have really abandoned. The point is that we must deliver and implement.
Yeah.
I mean, so merely we are showing the numbers that won't do.
Fair point.
But we have added, huge amount of roads. If you really see as we speak, many roads are getting built, many railway things are happening. You have huge number of Prime Minister Awas Yojana housing, which is gone in. You have a massive Jal Jeevan mission, which is happening. You have 1.5 lakh scheme, which is zero interest loan for the states that is happening, subject to reforms. And we are reforming. While we are doing is we are reforming, deregulating. Wherever we can do settle, even in taxes, even in tariffs, voluntary compliance, trying to do that, spur the animal spirit, spur the entrepreneurial spirit. Startups.
Do you believe that you're finally going to be able to unleash the animal spirits, and what will that mean as far as the gross fixed capital formation is concerned? Are we likely to now move beyond that 30% mark?
Well, if I were the animal, I'll be spirited.
But on a serious note, do you believe that we're now going to move the needle on that number?
On what number?
On the GSF, the gross fixed capital formation number, sir. which has been at about 30% for the last few years?
Well, I think there are CIA surveys, there are other surveys which show that, there have been uptick in order books. There have been, capacity improvement in capacity utilization. And I think the demand will build up, the jobs will be created, and there will be more, incentive for the private sector to further invest. So both saving and investments must rise, and that should be our continuous strategy.
So 6.8%?
Well, I won't really go out with a number, but I would say that definitely we will spur that, whatever numbers that we said is trend growth rate. The question is, can we push up the trend?
Can we push up the trend? But very clear, unambiguous comment they're coming in from the Finance Secretary, not abandoning Capex. You need to look at the Capex allocation with the center and the states together on an aggregate basis, and you believe that the tax cuts that have been delivered will spur consumption and accelerate the growth momentum. And IDBI Bank, hopefully the bids will come in by March. So in this financial year, that's the hope at this point in time, but we will have to wait to see whether it is finally delivered or not. Mr. Chawla and Mr. Pandey, always a pleasure. Many thanks for joining us here. Today we have limited time, but we will of course continue this conversation on the CNBC-TV18 budget verdict. Appreciate you joining us here at our budget headquarters. We are going to take a break here, but the budget conversations will continue. Don't go anywhere. We're back in a moment. You're watching CNBC-TV18 India's budget headquarters.